Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. Today is Friday, so obviously the energy levels would be a bit higher, right? For the market, the energy levels have always been high, despite the bit of a test of its resilience which has happened over the last couple of days. But the big question really is that, is this test now getting into a stage where perhaps even our market might have to just say, okay, I might be flunking this test? Because while yesterday you did see Indian market recover quite a bit and they did survive the global scare, the big moves are happening really in the money market, and it will be interesting to see the way the dollar is at dollar rupees at 81 and the dollar index is at 20-year high. For how long can the Indian market survive this global risk off? That is a big question. The SGX Nifty will come up for you. It's a bit soft. And let's see if yesterday's low gets defended or not. Prashant, Sonia, hi, good morning.
Hi, morning, Anuj. Morning, Prashant. And the global risk-off is quite prominent, right? I mean, yes. It's pronounced, especially after what happened yesterday and through the course of this week. I mean, the US markets were down about over 100 points yesterday. For the week, the market is down 2.5%. And if you look at it for our own markets as well, FIIs or foreign investors have resumed selling in large amounts. So there was 2,500 crores of selling in the cash market yesterday. And put together, if you look at the last 5 or 6 trading sessions, barring 2 sessions, which is 19th and 20th, there's been large selling of over, 2,500 to about 3,000 odd crores. The only saving grace for our markets is that there is an outperformance in the mid-cap end of trade. So there's a lot of bottom-up stock picking that's going on there. The Nifty mid-cap index was up about 1% this week so far, outperforming the headline index. And a lot of stocks, non-index large caps, have seen big moves this week, whether it's, something like a KPIT Tech, Varun Beverages, Patanjali Foods, all at fresh highs, Page Industries at a fresh high as well, and something like an Ashok Leyland being the biggest gainer this week. So that has been the theme, right? The outperformance of the broader markets. Even if the headline index chooses to pause or see a time correction, do you reckon that there could be this stock-picking bottom-up movement in the broader markets?
I think that will be the trend, has been the trend for some time, but in between the market will throw out some of the weak players. I think the market is doing that, Sonia, right now. And for me, the data point that I'll watch out for, and this is the question that I put to Sunil Kaul as well yesterday from Goldman, is this FII selling. Because in the last 1 month, the rally that we had, a lot of FI money had come into India at the expense of China and a couple of other markets which had problem. Now that money is momentum chasing market. If it doesn't get momentum, it doesn't care what your macros look like, it will get out. So, in last 5 out of 7 days, we've seen FIs actually sell. And the September number is now almost turning into negative territory. After a very good August, net in September, we're about to turn negative. And if this trend continues, September could be a negative month from the FI point of view. Not just that, there's been selling in the futures and option market, and in index futures, after short covering of last 3 or 4 days, yesterday 26,500 shorts were added, which has taken the net short positions back to over 60,000 contracts. Now, I know we keep saying that these shorts will provide fodder to the market to go up, and if the market doesn't fall, what if the market falls? That, I think, is a question which nobody wants to sort of answer, because everyone has just assumed that every dip will be bought and the market will just keep going up. Things can change, and the way currency markets are moving, just have to be a bit careful of what's happening here. I think the Nifty needs to hold the 50-day exponential moving average to stay in this uptrend. That level comes in at 17,350. So that's your Lakshman Rekha, if you want to call it. On the upside, the 20-day exponential moving average is 17,700. That will be the first resistance point. This is also that trend line, that falling trend line that we have been repeating ad nauseum. It's almost become the go-to level. It's almost like a magnet. Every time the market is going up or down from this level, it's attracting, the index back to that level. So 17,700, I think, is your fulcrum. The Bank Nifty, of course, is the index to track because that's the leadership pocket, but that has started to falter a bit over the last couple of days. The 20-day exponential moving average is 40,270. That is all important. If that goes, I think the Bank Nifty is in for another 1,000, 2,000 point correction, if that happens. If not, then of course we'll take it from there. If you're a day trader, yesterday's range is something that you've got to keep an eye on, because it looks like we'll start somewhere around yesterday's low. If you protect it, maybe the market has a rally towards yesterday's high, who knows. But the fact is that things are looking slightly more muddled than they were, say, about 2 weeks back. Prashant, hi, morning.
Yeah, absolutely, Anuj. I'll just keep it very, very brief today. So equities continued their sell-off. Both the S&P and the NASDAQ were down, under 1% and over 1% respectively. The US 2-year, which is the most aligned to where the Fed wants the Fed funds rate to kind of be at by the time they're done with this hiking cycle, has crossed the 4% mark convincingly. The 2-year is at about 4.11%. The 10-year rose 18 basis points. That's a big one, to about 3.71%. The DXY index has now, it fell, by the way, but it went back up by close to about 111.3. The dollar always hurts. I mean, you know, they call it the dollar wrecking ball for a reason. It puts pressure on currencies. I mean, you've seen what happened to the yen, the intervention yesterday. You're seeing what's happening in other countries. I mean, the euro, for example. But these are countries with underlying problems as well. It's not as if these countries are doing very well. And, you know, the dollar rising is hurting currencies. There are underlying problems as well. But it's showing up in so many other places. Here in India as well. It's a real trade-off now with the rupee. What to do? Let it go for a while with the dollar so strong, or save your ammunition, because it's going to be a long, uncertain kind of year. So I think that's essentially the big talking point. Oil, it ended at about 90 odd. You know, the thing with the market here is oil being at 90, which is significantly lower than $40-50 lower than where it was at the highs a few months ago. Is that the bigger macro positive for a market like India, which is such a large importer of the stuff, as compared to the dollar rising and global demand slowing down? So at least for now, I think that seems to be working. The other big kind of thing is, I think, you know, I put this out 3 weeks back, which is basically showing how India amongst the emerging market pack is perhaps the preferred choice, because so many other places in the world in that emerging market index is doing so poorly. But I think one gets a sense that, you know, it's well discovered, it's well recognized as well, this particular fact. So I think the direction will depend, this alignment with global markets, or, I mean, will we continue to chart our own path, will depend purely on flows, foreign flows. You know, that's a tough question to ask. At what point do foreigners have had their fill, and you know, money starts going back home? So I think those are questions we will have to kind of deal with as the days and weeks go by. But the outperformance, I think, has been the theme this year so far. 20% down in the S&P, more than that, and the market here in rupee terms at least is higher for the year. Sonia.
Absolutely. And you know, while we are talking so much about the global markets, in our own markets, the theme that has done really well this week is FMCG.
Yeah.
All FMCG stocks are up 4 to 7%.
The index is up 4.5% this week so far.
Absolutely. So that domestic consumption theme is intact, right? HUL, ITC, Britannia, Titan, all of them, the biggest gainers this week.